Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Good afternoon.
Well, let's start with some news in the U.S. The Biden administration's decided to blacklist 7 Chinese companies in the supercomputing industry, citing national security reasons. So it seems like the pressure on China started under the Trump administration is not going to let up. So tell us about this latest move and what impact tensions with China will have on the global markets.
Yes, as you said, the U.S. added 7 China supercomputer entities to its economic blacklist. China is using supercomputers to speed up the development of hypersonic missiles, and the U.S. is in a global arms race with China and Russia to build the most advanced hypersonic missiles. The Biden administration is taking steps to undermine China's effort to build the world's fastest supercomputer necessary for the development of advanced weapons, including the nuclear weapons and hypersonic missiles. 7 Chinese firms and the government labs were placed under export control by Biden administration on Thursday due to the ties to the China's government, and it seems to be threatening the national security concerns for U.S. This means that they will not be able to use technology that originated in the U.S. without a Commerce Department license. President Biden has made clearly that the U.S. and China is competing on the various research and development in a lot of industries, including technology and infrastructure. And in his speech of $2 trillion plus infrastructure proposal on Thursday, Biden warned that China is racing ahead of the U.S. And it seems that continuation of the competition between U.S. and China continues, as we know that the level of the investment made for the supercomputer is much greater for China than U.S. In the recent few years.
Now, turning to the markets, stocks in New York closed higher overnight, and yet another new high for the S&P lifted by big tech and a gain of 1% on the Nasdaq. What's the story in the global markets?
Yes, the Dow Jones added about 0.2%, but the level of rise for the Nasdaq and S&P were much higher, particularly for the Nasdaq. S&P 500 gained about 0.4%, and the tech-heavy Nasdaq outperformed most of the indices, surging by about 1% plus. Clearly, the weakening of the U.S. interest rate, the 10-year government bond rates, has actually stabilized because the news that the weekly jobless claims came in worse than expected, which means that the prospect of the reopening of the economy seems to be a bit of a concern. And clearly that means that the Fed will continue to provide ample liquidity to the system and that the interest rate will remain quite low. Right now it is running at around 1.66% for the 10 years government bond rate. And if the continued liquidity in the market continues, then the level of the interest for the Nasdaq would continue, given the fact that the Nasdaq shows a very strong growth of the sales and the strong growth of the return on equities, and clearly much higher than the interest rate environment right now. So having said that, we think that the U.S. market has turned for better as the Goldilocks period continues for the U.S. equity market.
And the indices were up across the board pretty much in Europe and the U.S., but here in Korea today, the markets were mixed. A gain for tech shares on the KOSDAQ, but the broader KOSPI a little lower. Tell us about the local markets.
Right. As you said, the KOSPI actually closed down by 0.36%, while the KOSDAQ was up by about 0.75%. The reason that market was down is because of the heavy selling occur for Samsung Electronics and SK Hynix. We don't know the main reason for this, but in any case, if you look at the foreign investors, net sold about 324 billion of the Korean equities, and the institution of Korea sold about 411.2 billion while the retail investor is the only one that buying of about 726 billion. It seems that continuation of the liquidity issues in regards to foreigners selling, institutional selling, while the local investors buying is affecting the equity market. However, though, the Korean equity market continues to be one of the better performing market amongst all the other countries. And if you look at the economic data, the South Korea's current account surplus is widened in February as export rose significantly by 9.5% year on year in February. And it is fourth consecutive month of gains, and also import gain by about 13.9%. So clearly, continuation improvement in economic conditions for Korea is happening, but it seems that the foreign net selling and institutional net selling is affecting the liquidity condition of the equity market, and it seems to be kind of timid for now. However, though, given the fact that the earnings growth rate will be very strong for Korea in terms of KOSPI as well as KOSDAQ, we think that the overall conditions should get better as the Korean won stabilizes, and the net buying of the foreign investors would probably come back, which we have seen in the last few weeks.
Well, we've got about a minute left. So, Mr. Yu, I'd like to look at oil prices for a minute. They're down apparently on a rise in fuel inventories. Gold, though, rising so far this month. Tell us about these two commodities and your outlook for them.
Right. I think the gold would probably stay reasonably at around 1755 ounce level, which is right now. Given the fact that continuous liquidity conditions is ample for global market, and therefore the gold should be remaining quite reasonably okay, despite the Bitcoin attractiveness. As for the oil prices, however, though, it should be in a box range. Right now it's trading at a 59.24 barrels. And because the reason for that is because you are seeing quite significant increase by about 4 million barrels in the wake of gasoline stocks for U.S. And we think that the supply and demand side wise, we don't think that there will be any pressure for the prices to go up even further from the current level. The range should be anywhere between $55 to $65 per barrel over the next 1 year.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for sharing your insights with us, and have a great weekend.
Thank you very much. You too.